Good afternoon and welcome to GrainTV. It's April 17th, 2013. I'm Logan Burgess. To my right here is Brock Shinmano. Well, Brock, let's jump into fire tip. See how the grains traded here on a Wednesday. As you can see, we had corn for the May contract backing off 2 3/4. Soybeans, the leader to the upside, up 10 3/4 on the May delivery there. And Chicago and Kansas City wheat, both relatively unchanged. If you guys want to get live quotes over at your home or office, visit us at grainhedge.com. You can take a no-obligation trial, the platform that we use here on GrainTV. Brock, what was kind of your take on the action here? You know, wheat in general had a pretty, the settlement didn't show a lot of change, but we had quite a lot of volatility in that market today.
Yeah, there was really some volatility across corn, soybeans, and wheat. Wheat in particular did experience a lot of volatility. I think there's a couple things at play there. There's some freeze concerns for the southern plains once again over the next couple days or so. So I think that put a little bit of a bid underneath the market early on in the session. Later on, though, I think it was kind of fighting an uphill battle against the dollar index that was rallying very sharply. As we know, the dollar index, when that becomes stronger, it's harder for us to get export sales, and that really takes a hold onto wheat in particular. So I think we saw it tail off towards the end of the session. If we jump into a 5-minute chart for the May contract on Chicago wheat here, you can see that we did rally to start out that session, like I was saying, because of those frost concerns. As we started to consolidate around that 714 area or so, we ended up selling off quite sharply once that dollar index kind of took hold and ended up the day only 1/4 cent here on the Chicago contract.
Yeah, you know, quite a bit of strength out of that dollar index today. That's a pretty darn big move there, almost 1 point on the dollar index. It certainly seems like soybeans, though, weren't really held back by the big move in the dollar index. We were kind of bumping our head against some technical areas. Is that kind of your take on beans here from today?
We did see a nice rally in soybeans. We saw commodity funds jump in and buy 6,000 contracts, so I think that helped the rally here today. But also soybeans complex in general, the soy meal and soy oil was kind of leading the way there. There's some renewed interest for soy meal exports and soy oil exports, so I think that really pulled up the soy complex in general. But if you take a look at this daily chart here for the May soybean contract, you can see we did have a nice rally yesterday, and then today we ended up bumping up against that 100-day moving average, which is the magenta line here, and then also against the 50-day moving average, which is the aqua line. So we did meet some technical resistance and just a little bit of selling once we did bump up in those areas. About 1425 to 1430 is those areas that we hit.
Yeah, you know, there is some talk of renewed interest in U.S. soybeans out of some issues in South America. Do you think that fundamentally this market has the legs to kind of make another move higher here? It seems like it's kind of rolling over here a little bit, looking at the long-term chart.
Yeah, you know, long term, I think we're going to need to see some more fundamental confirmation. Export sales will be big to watch tomorrow.
Right.
You know, continue to monitor what's going on in South America. There's some rumors of some more dock strikes down there, so we'll have to watch that as we move forward here.
Absolutely. Well, today we did get EIA ethanol production numbers out. You know, for the corn market there, not a big driver of the market in today's action. Let's take a look here at the model, though, that we've been charting throughout the marketing year. As you can see, we pulled back this week in terms of production, down 22,000 barrels, looking at it week over week. On average, we produced 832,000 barrels of ethanol per day last week. And as I said, that was down from the marketing year high, which we had in last week's report. So still a pretty good number there in terms of where we've seen it at this marketing year. Right now, we are seeing ethanol crush margins remain pretty darn strong. Looking at Iowa right now, we're seeing that about $2 a bushel. And really, that's been driven largely by the huge decline in old crop corn that we've seen here over the last couple weeks, you know, as a result of the March 1st stocks report. So see here, the green line on this chart is the grain hedge forecast here, and given the crush margin, we're expecting crush to pick up steam here over the next couple weeks. But in general, we're still thinking that the USDA is overestimating total bushels going to ethanol by about 50 million bushels. We'll keep you posted on that here on GrainTV, but like I said, a good showing this week for ethanol numbers.
Another number we're going to have to watch tomorrow is export sales, like I was saying, for soybeans in particular. Corn will also have to follow. Old crop estimates are for 100 to 350,000 metric tons sold last week. Soybeans 100 to 500,000 on the old crop, and wheat 50 to 325,000 metric tons sold. So we'll have to check out those numbers tomorrow morning. 7:30 a.m. is when those come out Central Time. Make sure you follow us on Twitter at GrainTV is where you can find us. Check us out on Facebook or get a hold of us at 877-472-4607.
Have a good one.